seats. Ladies and gentlemen, please take your seats. The show is about to begin. Please welcome Axios business editor Dan Primack.
Hello everybody. Thank you so much for coming out today for this conversation on crypto and investing and all that good stuff. Huge thanks to our sponsor Grayscale, without whom this event wouldn't be happening, without whom there'd be no coffee, and you'd probably all be a little more hostile this morning. And speaking of which, thank you so much for those of you who are here physically in the audience. It is great to be doing these again, for braving the rain. And to everybody watching us online and on Twitter, please use hashtag Axios events. So let's get to it. Without further ado, I'd like to introduce Katherine Wu, who is a venture partner at Archetype Ventures. Katherine. Hi. All right, so we didn't plan this event to come after a, let's call it horrific day in crypto land. There were layoffs, there were exchanges and lenders that stopped allowing withdrawals, there was asset price losses from everything from Bitcoin to Coinbase stock. You invest in this sector for your job. Panic?
For better or for worse, this is my full-time job. I think if this was my first time seeing all of this happening, I think I would probably be a little freaked out. But look, anyone who's been in the industry for the past 5+ years, you're probably sitting here being like, okay, I've seen this before. I think the pattern, repeats itself, and I'm going to hold tight. And look, got into it for a reason. I'm going to hold steadfast in my belief and hope, things rebound evenally.
I mean, is that kind of like the article of faith for crypto investors in general, that in the long run things will just continue, that this is still a nascent industry, things will continue to grow, so you have to take, whether you call this a winter or a blizzard or whatever has happened in the last 24 hours?
So, I mean, first and foremost, I think as an investor in crypto, you just have to have guts of steel, right? Because you just have to be able to stomach the volatility. I remember in the last bear market, in 2018, I think I had a much more different mindset back then because, when you look, I don't like to talk about prices, but, it matters. And so I remember waking up Thanksgiving 2018, and I checked my phone, and Ethereum was $70. And that was a real moment of panic. And I think 2018, there was really a question in the back of my mind, is this going to last? Is this really going to zero? Did I make a horrible mistake going full-time in this industry? Now looking at it, in 2022, just thinking about all the infrastructure that's been built, the talent that's in here, I think we've kind of probably crossed the chasm enough where I think it will probably be okay.
Speaking of which, why did you get into this? You're not, I guess probably very few, I guess now you can go to school probably for Web3, but couldn't when you were in school. You're a lawyer by training. You even interned at the SEC for a while. How do you get from that into becoming a crypto venture capitalist?
That's a great question, and something my parents still don't have the answers to. When I was in law school, and for anyone here who has been through law school, has a JD, there's always maybe a moment in law school where you're like, oh my God, I don't know if this is what I want to do, or at least maybe that was just me. And so I wanted to be a fund formation lawyer, so really fundraising the proper way. And so I read about ICOs happening, and I was like, wow, there are just companies just raising millions of dollars in the span of 30 seconds, and that's a very not what I'm used to kind of thing. And so that piqued my interest. And the more I looked into it, the more I was like, I think there's something here. I think that's really interesting.
Do your parents now understand what you do?
No.
They still don't understand. All right, so something, it's interesting. On the venture capital side of things, it had seemed, we've obviously had macro troubles, not only in the stock market, but in the venture capital market broadly. And if you look at Q1 venture capital numbers across the board, they are down for really the first time outside of, the blip during the early months of the pandemic. Crypto investing seemed immune to that for a while. You still kept seeing massive rounds and kind of large disbursement numbers. Has the downturn caught up to crypto venture investing?
I was actually thinking about this, why when I felt like traditional venture was slowing down, that crypto seemed like it was still going great. And I think there are maybe two reasons. One is a little obvious, actually, is just that funding announcements are delayed. And so sometimes things raised months ago, they just announced now. So I think we're seeing a little bit of that. I think the second thing is, crypto is inherently just really, really global. And so I think, I'm talking to entrepreneurs who are building in the US, in Asia, in Europe. And so maybe just because of how global volatile it is, and like sometimes the news cycles just don't quite catch up. But we certainly are seeing a slowdown. We're certainly seeing price corrections, and so I definitely think we are not immune to the macro environment either.
Are there areas, cryptos, and to be honest, we were talking backstage that you and I might just be old and even referring to it as crypto as opposed to Web3, since we're not just talking about currencies, we're talking about a much wider universe of projects and types of companies. Are there areas within Web3 that you see slowing down more than others, or conversely, areas that you see expanding faster than others in terms of investment opportunity?
Yes. Well, so the market definitely, I think, like dictates sometimes where people go build. So, for example, in a bull market, so when things are going great and everything is rosy, people tend to want to build application layer stuff, and that what I mean is like things for the consumer. So instead of building infrastructure, which is for developers, I think in a bull market, people just rush to build applications. And so one of the really big trends you saw building there in the last 2 years or so, not just NFTs, but also crypto gaming. And so, the rise of Axie Infinity led to a lot of play-to-earn games. And so I saw a lot of consumer layer stuff.
And then there was and sorry to interrupt, then there was a fall of Axie Infinity. And for those who don't know, as you say, it's a play-to-earn game, and there was a lot of value to what you earned, and suddenly there was no value to what you earned, so why are you playing? So, I mean, has that disappeared, or at least gotten depressed?
So I think, again, like that's what the market's, right? In the bull market, everyone's excited. So any like new consumer application is just really exciting, really new. So you want to try it out. But then, when markets slow down, maybe you see some price correction, consumers are the first to leave. Because look, the people who are building for the long term are building infrastructure stuff, and so when people get excited, it makes sense that like consumer application layer just really explodes. And in a bear market, at least from an investor perspective, I'm really excited to look back, take a focus back into looking at core infrastructure, because at the end of the day, crypto is still so new. So many of these applications are run on kind of really new infrastructure. They're not really quite there yet. So as an investor, you look at the markets, you think about where people are going, and you also, for me right now, I'm like, okay, infrastructure time.
That's interesting. I'm now thinking back, because I'm old, so I can think back, to say kind of 1999, right? And a lot of the original dot-coms, and a lot of those consumer-facing companies, mostly which was retail, but a lot of those consumer-facing companies fell, and as you said, what people started focusing on again was the core infrastructure of the web, the original web. So I guess I'm curious, when you look at things, and this is generic, but when you look at consumer-facing Web3 companies that have been funded over the last couple of years, is that going to be a kind of a wipeout like a lot of those 99 companies were, and you're going to get that infrastructure, so it'll be that next generation that's really the generation that has longevity?
Honestly, it really comes down to your business model. So if your business model was just pure, I'm going to cash in while everything's hot, you're not going to last, But I think if you were building for the long term, for sure. I mean, there are still application layer things that I think can go really big. And like, one example is ENS, which is like, if you've been on Twitter, you've seen people in crypto have like, Dan.eth, right? You've probably seen that, Katherine.
I have. I do not own an ape, so I don't feel I should be doing that. Do you own an ape?
You can't ask a lady about her NFT holdings.
Fair enough.
All jokes, everything's on the blockchain, so you really can see that. But if you've seen on Twitter, Dan.eth, that is what an ENS is. And that's like, you own your own domain kind of thing. And that I just checked right before we walked on, has about 1 million registrations today. So I think that is only going to get bigger. So that's an example of a consumer layer that's also infrastructure that I think can have staying power.
You've used the term bear market a couple times, which certainly literally refers to what's happening in stocks. The S&P 500 went into bear territory yesterday. Is crypto currently in a bear market? Forget the technical definition, whatever, if crypto has a technical definition of bear market. But I mean, is that how you view the market right now?
Well, I mean, I think, okay, there's a couple of things. Certainly, I think deal making is slowing down. Deal pace is slowing down. Certainly, we're seeing price corrections. We're certainly seeing what you call tourists kind of like leave the industry. And so you're seeing all the signs of people not being as excited anymore, but it doesn't detract from the builders who have already raised, from people who work full-time in the space, and people who are still really in it. So I guess that's a roundabout way of answering.
When you look at the universe, when I look at the universe of crypto venture capital, there's a couple buckets. There's kind of generalist venture capital firms that have one or two partners and maybe have a practice. You have like your firm, Archetype, that are dedicated. And then you've got a lot of, call it, corporate crypto venture capital, which is coming usually from crypto companies. You used to work at doing Coinbase Ventures. FTX obviously invests a lot. If we're seeing a pullback and we're seeing price pullbacks, and for something like Coinbase, which has a publicly traded stock, which is an all-time low as of yesterday, do you expect that the corporate piece of that, which has been pretty significant in terms of dollars, is going to slow down and they're going to pull back a bit?
I mean, I'm no longer at Coinbase, so I don't
Yeah.
know how they think. But generally speaking, corporate venture arms probably get a budget from their balance sheet, the main balance sheet. And so in a time when layoffs are happening, you're trying to cut costs for a company, probably it would make sense to either halt or at least lower M&A activity, and that probably also extends out to ventures. And again, like different corporate arms have different ways of where they get the capital from. So for ones that come off balance sheet, it probably makes sense to slow down a little.
You've talked about, I want to make sure, you've talked about wanting, you've got, for example, do podcasts and stuff, you've wanted to make crypto more accessible, I think is the term you've used, kind of to the general public. So what does that mean to you? What does it mean to make crypto more accessible?
A couple things. It means as the industry gets bigger, we should probably start to think about ways to use terms that aren't just like jargony, right? Like, I think there's like very simple things. Like, I mean, when you go on a crypto website, you guys have probably done this. You're like, oh, I want to look into this, and you like type in like a whatever URL. And you're like, I know this is English. I don't know what this says. And I think that is probably some like a very low-hanging fruit that you can start with. It's just like, how do you explain in a way that's don't use jargon to explain more jargon, right? And I remember when I was first learning about crypto, that was like a big thing for me. I was like trying to find one definition. The next thing you know, I had 20 tabs open. I'm like, I still don't know what I'm reading.
Has crypto, and I think back to the Larry David, Matt Damon Super Bowl ads, a lot of people who say maybe bought Bitcoin on Super Bowl Sunday have not done so well since then. Has crypto become too accessible to ordinary retail investors who maybe don't understand all the jargon?
I think there's a difference between accessibility in terms of like ease of use and education, which is the understanding part. And I think like what we're lacking is like maybe on the education front. I have so many friends and family who come to me and they're like, I know you're doing this thing, right? Like in crypto, you've done it for a few years. I'm really curious, but I'm so scared and I have no idea where to look, right? I don't know what sources are valid. I don't know who I can trust. So I think the education piece is huge.
The regulation piece, perhaps, too. We're in Washington, as you former lawyer, you worked at the SEC briefly. If you were in charge, pick an agency, doesn't matter, Congress, you're the president. What's one thing regulation-wise you would do to improve the crypto industry or investor protection or something around it?
That is probably not for me to answer, but there are organizations who are doing amazing jobs, like the CCI, so the Crypto Council for Innovation. There's the Blockchain Association.
Is there something you think that would make the industry better from an investment standpoint, as an investor, that would make the industry stronger, more lucrative, whatever the term would be?
I think we're all, okay, so there was a big crypto bill that came out, or like a draft that came out last week. And I think I saw that and I was like, okay, see, this is an example where not everyone in crypto hates regulation, right? It's like we actually, I think it would be nice to get some clarity. And there's like all kinds, right? It's like taxes and treasury. There is like, whether or not, what really is a sufficiently decentralized project or protocol. There's not really a legal definition for that. So I think if you look across the gamut of all agencies,
did you like that bill? Like, if you were voting, would you vote for that bill?
I didn't read it enough to answer.
Fair enough. Okay. One of the things that fascinates me about crypto is that, particularly in the tech community, is that there is this incredible divide, it seems to me, between, not in terms of people who are investing or not investing, believe it's going to be a good investment or not, but if Web3 has any utility at all, not a lot of utility or a little, but like any, if it's an improvement at all on Web 2.0 and cloud computing. And you've got a lot of call them Web 2 CEOs who've made a lot of money and done very well, who view the stuff you're investing in generically as ultimately worthless to users. Why do you think there is such a split? Because I haven't seen that. It's one thing to not understand a new technology, but usually people can at least see the potential use case.
So it comes down, I think, to probably what you're really getting at with Web3, which is, and I've been an investor in both Web 2 companies, also Web 3 companies. So my career wasn't just focused on Web 3. So I think with Web 2 companies, and this is just like your traditional startup, I think the assumption as a founder is that you're probably going to, steer the ship for a while, probably until IPOs, you get most of the equity in the company, which I think is fine, right? But I think with Web 3, it's really the assumption of that is challenged. So a founder is not necessarily expected to forever be like, the king of the company forever. When you think about equity in the company, so in crypto that comes in the form of tokens, it really is very thought clearly from day one, how do I distribute it to the hands of the users from day one? So I think from the get-go, a lot of that kind of dynamic is just flipped.
Why though do you think it is that a lot of the leaving the investors maybe even out, a lot of the technologists in Web 2.0 don't see utility in Web 3 or don't see improved utility over what already exists?
Well, that's right and wrong. So they're right that crypto is really hard to use, like crypto gaming. Oh my God, like I am a huge gamer and I don't know that I would touch crypto gaming right now, right? And I think, that's terrible. I think the UX, UI in crypto has always been a little clunky. Again, I think that's to just how new the industry is. But I don't think it's really fair to look at crypto and be like, there's nothing there, because
Okay, well, I'll ask it better. From a practical perspective, as a layperson, what ultimately do you think will Web3 let a normal person do that they can't currently do with current technologies?
Okay, it depends on who you are. So one of the trends in crypto right now is the rise of music NFTs. And you're like, what? Who cares? But if you're a musician, that really matters to you, right? Like, I think, any Taylor Swift fans out there understand the battle that she's had with her recording label, right, over the rights of her own song. Like, she didn't own her own songs, and I think, Taylor Swift is like a big example of that. But when you think about as a musician, if I can bypass that and just release my music to my fans, who are really like the lifeline to my career, I think that's really, really important. So, right, that's just one example. So there's musicians, there's artists, or really depending on who you are, there are different use cases for you.
I have 10 seconds left, so you're not even going to explain what it does. Give me one portfolio company that you're the most excited about, just their name.
Obol Labs.
Katherine, thank you very much.
Thanks
so much. Now, I'll be back in a minute. We have a view from the top segment.
Now introducing Axios Chief Business Officer, Fabrizio Drummond.
Good morning, welcome, and thanks for joining us, our guests here in person, our viewers joining us virtually. Please follow along on social using hashtag Axios Events. Please join me in welcoming our next guest, the CEO of Grayscale, Michael Sonnenschein. Michael, let's dive in. You've been making yourself known in DC. I recently saw a Grayscale advertisement at Union Station. Walk us through, why did you file with the SEC to convert your flagship fund, GBTC, into a spot Bitcoin ETF? What do you want folks in DC to know about Grayscale?
Well, we're not new to DC, right? So Grayscale now is the world's largest digital currency asset manager, and we have been running Grayscale Bitcoin Trust now for 8 years. So as I think back on the last 8 years, we've felt an immense responsibility to be in DC, educating policymakers, educating regulators. And I think since we've refiled to convert GBTC into an ETF, it's been really important that we turn up the volume and turn up the awareness for everybody in the DC community, as well as all of our investors, on just how mainstream crypto investing has become. And so the decisions that are being made around this asset class affect millions of people. I think that there's such an immense opportunity today for the U.S. to, regain or kind of seed itself as the hub of crypto innovation. We've certainly seen that on the heels of the White House executive order. And, when we think about GBTC in particular, we've seen Bitcoin ETFs be very successful in other jurisdictions. There's really no reason that we shouldn't have these in the U.S. as well.
There's also benefits to investors. So can you walk us through, if approved, what would the impact and benefit be for investors if they had access to a spot Bitcoin ETF?
Well, so today you have essentially this unfair playing field, right? Where historically the SEC had said no Bitcoin ETFs, can come into the market. And a couple of months ago, we saw the approval of the first Bitcoin futures-based ETFs, right? So whereas the SEC had historically had concerns over the underlying Bitcoin market, is it subject to fraud or manipulation, or is there enough surveillance? All of a sudden, there was comfort with Bitcoin futures, which was a big milestone for the industry and a big milestone for crypto and Bitcoin specifically. Today, though, investors are almost forced into using the Bitcoin futures products because those are the only products that exist. And when you think about the differentiation in terms of exposure to owning a product that owns Bitcoin futures as opposed to owning a product that just owns Bitcoin, there are some pretty material differences in terms of cost and who they might be appropriate for. In the case of GBTC, though, we as an organization have continued to increased the transparency and the access to GBTC over the last 8 years. So it's gone from just being a private fund to publicly trading as of 2015, became an SEC reporting company in early 2020. And now, really, when we think about the opportunity, there are investors holding GBTC today in all 50 states from both sides of the aisle, and it's probably now close to 1 million accounts in the US alone that own shares. And so today, the fund is trading at a discount to its net asset value. So if the SEC doesn't take action and allow it to convert to an ETF, it's holding back probably about 6, 7, almost $8 billion of investor value that would be unlocked overnight if the SEC is to approve its conversion.
And then what other elements or features make GBTC fit to be the first one to become a spot ETF Bitcoin?
Well, I think that there is ever more growing demand for access to Bitcoin in a safe, transparent, and familiar format. Whereas many, if not all of the applications for spot Bitcoin ETFs that continue to go in front of the SEC and continue to get denied are all merely just ideas on paper with no track record, no investors, no assets. GBTC today has $20 billion of American investor capital tied up in it, an 8-year track record. Again, it's been an SEC reporting company for 2.5 years. So there is quite a bit of differentiation between something that's already on the market with a demonstrable track record of success versus a whole bunch of other applications which are not yet time tested.
And you've been quoted saying that the next natural next step for the SEC would be to approve a spot Bitcoin ETF, mainly given the approvals that we've seen for the Valkyrie and Teucrium Bitcoin futures ETFs. What makes you say that?
Well, so I have a very smart in-house legal team, so I'm going to moonlight as them for a moment. Okay. But essentially, what you have is 2 sets of rules and regulations that govern ETFs coming into the market. So the 1940 Act is where most of the Bitcoin futures products have historically been approved. And after the SEC approved those first Bitcoin futures products under the 1940 Act, they actually came out and said that there were a couple of different protections that they thought were really important that were embedded in the 1940 Act products that 1933 Act products would not have. And that was their stance. Mm-hmm. And then as that thinking evolved, and then you saw the SEC now approve Bitcoin futures products under the 33 Act, which is the regulation that GBTC and other spot Bitcoin ETFs would be approved under, they've kind of invalidated that argument. And so as you now have Bitcoin futures products approved under the 40 Act and the 33 Act, the next natural step would be for them to approve a spot Bitcoin ETF as that thinking has continued to evolve.
Are there any other legal arguments that you're planning to make?
Well, I think certainly one of the things that we've been thinking about a lot is potentially the Administrative Procedure Act. And so this really governs the way that regulators regulate. And so when they're looking at 2 issues that are alike, but looking at them or treating them disparately, then it leads to violations of the Administrative Procedure Act, or the APA. And so in this case, because the Bitcoin futures products are a derivative of the Bitcoin spot market, and that's where they get their value and their pricing, and Bitcoin spot products are certainly getting their value and pricing from that same spot market, to treat these 2 products differently certainly portends for an APA violation.
So last week, Grayscale announced that you were expanding your already well-stocked legal team with the addition of former U.S. Solicitor General Don Verrilli. What should we, or perhaps the SEC, make of this addition of such a high standard professional to your legal team?
Sure. Well, the process for review of an application like GBTC's conversion does require a rule change. And so when there's a rule change, there's a statutory 240-day process, which in Grayscale's case, in our application, expires on July the 6th. And so over this 240-day process, we have really done everything possible. Every single individual at Grayscale has putting the full resources of the firm behind putting forward all of the best legal arguments and now activating what is almost 1 million investors. So we actually broke a record. There have been more investors that have written into the SEC in favor of approving this application than has been done for any rule change. Over 11,000 letters have been written into the SEC over the last few months. And so over this time period, with all of these comment letters coming in, not only have we continued to expand the legal arguments from both the Grayscale in-house legal team, but also our attorneys at Davis Polk who've been working with us on these issues for many years. And as we're approaching, the end of this 240-day process, we really thought to ourselves, who better to bring on and who better to retain than Don Verrilli, right? Former Solicitor General of the United States under Obama. Don has spent decades in both the public sector and the private sector, argued countless cases in front of the Supreme Court, super familiar with APA arguments and APA violations, and so he is a welcome addition to the team. And he's a great guy.
Excellent. Well, let's zoom out a little bit. So let's assume Grayscale is successful with the approval and this marker happens in the market. What does it mean for the broader market to have this milestone and for the future?
This is really about opening up access and transparency to Bitcoin as an investment. Today, sitting idly as a regulator with a product that's trading tens, if not hundreds of millions of dollars every day, and not bringing that further into the regulatory perimeter, who is the SEC protecting, right? I mean, that's really the question. And so the ETF wrapper, we know, is something that is familiar, something that is transparent, and that gives investors greater protection. Not to mention, moving this product up to the New York Stock Exchange, there's additional surveillance and other requirements that come with trading on a national securities exchange. And again, I think the temperature, we're having this conversation this morning in DC, you now have widespread bipartisan support for crypto regulation. You have sitting U.S. senators, putting forward new rules and regs and talking around this asset class with authority and a very, very strong understanding, and the backdrop of the White House executive order. So the entire ecosystem around crypto has changed, and the volume and the level of engagement in DC is unlike it's ever been before.
Excellent. Well, maybe one last question. What's one big trend you're watching in the second half of this year?
I think it would have to be plumbing. And when I say plumbing, I'm talking about infrastructure in and around crypto assets. The continued development of order management systems, indices, tax lot reporting, these are all those critical elements that have now been built out. And when we see those begin to get connected to the legacy financial system, it's going to unlock a lot more investors and a lot more value.
Excellent. Michael, we're out of time. Thank you for such a fascinating conversation. Thank you very much.
Thank you.
Welcoming back to the stage, Axios business editor Dan Primack.
Hello again. Our next guest was just confirmed in March, so what's that, 3 months ago or so, as a commissioner of the CFTC. Please welcome CFTC Commissioner Christy Goldsmith Romero.
Hi.
Thanks for joining us. I have to admit, CFTC, I struggle with that acronym. I just do. So let me use an acronym that I know a little bit better, which is TARP, because that's something you were involved with for over a decade in terms of oversight. It feels like in the last couple days that crypto, which is the technology is decentralized, but it feels not quite like contagion, but it does feel like there's been some interconnectedness in what's gone on over the last couple of days within the industry. Do you see any similarities between kind of the banking system of the aughts and what we see now in crypto?
Yeah, so I was just so you know, in 2008, I was at the SEC working for the chairman. And then I moved over to Treasury, started doing oversight over the TARP program, which I've been doing ever since until this new role, which is just recently. So there's a couple of things that I see some similarities in the crypto industry now in 2008. The first is we've got a pretty sizable market that's largely unregulated. Regulators just have no window into it. So when I think about 2008, I think about risk, and that's an area of risk as I look at it. The second is that market has become pretty broadly correlated with the broader equity markets. So let me dig into just those two things real quick. So there is a regulatory gap. So the CFTC, we're going to regulate the derivatives of crypto commodities like Bitcoin and Ether, but we don't actually regulate the cash or spot market for that. We have anti-fraud authority, but it's pretty limited. And we've done that. We brought enforcement actions, but we can't really look into that market to see where there's fraud or have any oversight. On the correlation issue, what you're seeing is the crypto markets are really become correlated with the equity markets. So you can watch Bitcoin rise and fall with NASDAQ.
Which it's not supposed to, not supposed to, but at least the argument for years was it wouldn't. It was a hedge against, well, inflation, which is also kind of against NASDAQ up, rising and falling.
Yeah, it's not how it was sort of designed, but that's what's happened. In a down market, you're going to see risk exposed, and that becomes really important. But let me tell you one difference from 2008. There's not a lot of financial institutions invested in cryptocurrency, and a lot of them come in and tell me, well, we're waiting for a regulatory framework, more regulation. So to the extent that happens and they become more invested, there's going to be a lot more interconnections, a lot more interdependence, but then there's also going to be a lot more customer protections, a lot more guardrails. So when I look at this, my biggest concern is that if regulation fails to keep pace with technology, the most vulnerable people are going to be hurt. So when you look at a lot of crypto customers, you're talking about a lot of young people born after 1980, very diverse, and a good number of people who make under $50,000. So when I think about customer protections and the customer protections they're used to and the kind we'd like to put in are things like segregation of accounts, right? What's in your account is yours. You control it. Someone can't just sweep it when operating expenses go low or commingle it. But there's also things like settlement and custody and reducing cybersecurity risk and theft and extreme market event risk. I liked customer education was brought up in an earlier one. Just so you know, every crypto company that comes in to see me, I ask them about customer education. Very important.
Do they, when you ask about customer education, do they usually have a list of bullet points ready to go, or do they kind of look at you blankly?
I think the fact that a regulator is asking about what they do on customer education makes them pause for a little bit. And usually what I've been seeing is after that meeting, the customer education spikes. And if I can make that happen, I'll keep doing it.
You talked about regulatory gaps and things that you can't see. Is that simply because the regulation isn't allowing CFTC to see these things, or at least to look into these things? Or is it because from a technological perspective, it's literally hard to see and hard to find? No,
the regulation doesn't allow it. So there's not, the CFTC doesn't have any regulatory authority. We can't look at books and records. We can't examine any of these crypto companies or the crypto trading in the spot market. So we just have zero window, zero oversight, zero scrutiny of it.
There is, and this got mentioned earlier, there was a bill, or at least a draft bill, that got circulated last week by Gillibrand and Lummis. What are your thoughts about that bill? Because obviously it does make some definitions and does give CFTC some specific authorities. So I am certainly of the opinion that I would like Congress to act to close the regulatory gap and give the CFTC greater authority beyond our anti-fraud authority into the spot market. So I'm very appreciative of Senators Lummis and Gillibrand, as well as Chairwoman Stabenow and Ranking Member Bozeman are about to introduce a similar bill in terms of giving the CFTC more authority, and House Agriculture did the same. I think that's going to be very important. The President Biden's executive order was brought up in the last panel. That recognizes the need for a regulatory framework, but to have that to be comprehensive, it's really going to need congressional authority to do that. Does the bill that came out last week, from your perspective, is it adequate? Well, I haven't gone into all of the bill. I mean, I'm starting with sort of the higher level of what it's trying to achieve, which is to try to close the regulatory gap. And that's really important to do because you've just got so much of this. It goes back to the risk when we were talking about 2008. So much of the market is largely unregulated. And so all the bills that are looking to close that regulatory gap and give additional authority are aimed at reducing that risk. A cynic would obviously look and say, regulator wants more regulatory authority. Of course, that's what a regulator wants. Is there a case to be made that more regulation of the crypto market will slow the crypto market's growth and evolution? So I think at this point, the reason why many of these companies are coming in and asking to be regulated is because they really can't scale up in the way they need to without a lot of the financial institutions' investments and other investments. I was just talking to hedge fund groups who are also waiting to see for regulation. So I think regulation is needed. Bringing credibility, bringing customer protections, bringing these sort of market integrity guardrails are going to be really important for scaling up. It's interesting. There's obviously two agencies which have oversight in some way of the crypto market. There is CFTC and there's also the SEC. And the Gillibrand-Lummis bill seems to favors maybe the wrong word, but leans towards giving CFTC a little bit more authority than it does the SEC, and there is a view at least that CFTC is a little bit more laissez-faire than the SEC. You worked at both. Is that an accurate understanding?
No, not at all. So I worked 6 years at the SEC in enforcement and then as counsel to 2 chairmen. Now I'm at the CFTC. They're actually pretty similar. So both are really focused on investor customer protection. Both prioritize enforcement. CFTC's brought more than 50 enforcement actions in this space, pretty big actions. Both care about investors having disclosures about understanding products and risk, and both care about having rigorous oversight of markets. I'll tell you the difference that I've seen, which is that the CFTC has allowed more products to trade on CFTC-regulated exchanges, right? So the reason why that is in the Commodity Exchange Act promoting responsible innovation is one of the purposes, along with like customer protection and anti-fraud and market integrity. And so over the last 5 years, the CFTC has allowed crypto products to trade on 11 regulated exchanges. And there's about 18 products trading now. What that means is that the CFTC is pretty experienced in how to regulate trading in this market, and that's really, really helpful as we move forward. Still going to take cooperation and coordination with the SEC. I'm 100% committed to that. That's my former home.
Speaking of your former home, are you surprised that Gary Gensler, chairman of the SEC, has gone from when he was nominated, kind of viewed by the crypto industry as potential crypto hero and has now become crypto villain to the industry?
Oh my gosh. I'm not going to comment on that. I can tell you from my perspective, I see a lot of people at the CFTC and the SEC working really hard to try to get this right and to make sure that the right guardrails are in place.
Right, guardrails are in place. I want to ask, you talked about what you can't do. On the enforcement side, when you're deciding, let me see how to say this best, there's been a handful of things you guys have gone after. Gemini, BitMEX. Why the actions you've taken? Is there kind of an overarching philosophy for why the certain ones you've gone after are the ones you've gone after? Or are they all truly case by case?
Yeah, I think it's case by case. I mean, I'm a longstanding federal enforcement attorney, and I know that part of it is you look at it and you see where the evidence lies, and part of it is you're looking at it and you may be trying to send a message to deter future violations of the law. So that's going to be really important too. But a lot of it is just where the evidence lines up and how the cases come to you. I will tell you, with us not having regulatory authority, we really have to rely on victims or whistleblowers to come to us. And so some of it depends on that.
Do you get a lot of whistleblowers and victims coming to you? I mean, or let me rephrase, has that accelerated? And I know you haven't been in the CFTC for a while, but talking to colleagues, has that accelerated over the last 6 months or so?
I don't know if it's the last 6 months, but I'll say in the last 18 months, 2 years, I've heard that there's been an acceleration of a lot coming towards us.
Very important question to ask you. One of the groups that you did take enforcement action against is Gemini for making allegedly misleading statements. That's the Winklevoss twins' company. They're apparently on a music tour, and there's video of them singing terribly in New Jersey. Have you seen the video of them singing terribly in New Jersey?
No comment on any specific case.
Can you take an action against them for singing terribly in New Jersey?
I will leave that to you, Dan.
You will leave that to me. All right, fair enough. There's something else that you're dealing with right now, which is this issue potentially of direct consumer margin trading. And it's an interesting one. FTX is specifically the company asking for it, but it's more broadly interesting because it seems that it is pitting crypto against those traditional financial institutions, and they seem to be coming into conflict there. Is the CFTC ultimately the arbiter between those two groups?
Yeah, so that's an interesting question, and I don't want to speak specifically about a pending application, but I will tell you, if you zoom out and sort of look at this, the question becomes, how bespoke should the federal regulatory framework be? Right? I mean, generally, the CFTC is going to be pretty technology neutral, product neutral, and treat everyone the same. So the question is whether, if, and how much we would adapt the current regulatory framework for digital assets. And one of that is market structure. And so market structure has come up, and I think it's a good thing to be looking at these things. We had like an all-day public roundtable, which was great, because then all the different stakeholders can come in and talk about their issues. We had a lot of comments come in. And so this is one of those things where I think it's a good thing to be looking at whether we can bring efficiencies, whether there's improvements that can be made. It doesn't mean that everything has to be bespoke, but to the extent that there is an adaptation that we need to have, I think we need to consider that, and that's fair.
Well, let me ask you, on the bespoke side, the concern, if you want to call it concern, or at least the argument that's being made, call it from the traditional financial industry, is that if, for example, the FTX proposal was allowed, it could change kind of the way lots of other, maybe all other commodities are traded. Whether you think that's a good or a bad thing if it gets changed, is it fair to say that it would change the way all other commodities are traded?
Well, I think that is the question that is being asked and addressed. And I think when we look at the potential for changing market structure, you do have to look at whether you're going to try to limit it, whether it's appropriate to limit it, whether you should limit it, or whether that market structure should change for others. So I think as we look at this is why it's important to not look at it in regards to sort of one company or their structure. You sort of have to look at the future. So one of the things that regulators, I think, are struggling with is trying to determine what does the future look like. And remember that innovation is happening quickly, right? And so we are trying to look forward into the future and say, if we set up a regulatory framework, how do we know that it works for the future, whether it's just for digital assets or more broadly? And I think that's the right discussion that you want regulators to be thoughtful and deliberate about.
You know, we're talking about investing in crypto, and that's a broad thing. There's retail investors in crypto. There's obviously institutional investors in crypto. There's venture capital firms, et cetera. When it comes to just outright fraud, how much true fraud do you believe there is in the crypto industry? Is it widespread, or is it really just a handful of bad actors?
So I think that there are just thousands and thousands of companies out there, and trying to decipher, you know, what is legitimate versus what is fraudulent is going to be really, really difficult for your average retail customer. This is where I think customer education plays.
Do you think it'll be easy for your average, say, private, like, say, not Katherine per se, but a venture capitalist who can do due diligence? Should it be easy for them to spot?
Well, I think it'll be a little bit easier than an average retail investor, particularly one who's just trading on an app. You know, I think that customer education comes into play even with bigger investors as to what they're going to be asking about. And then this is where I think the customer protections come in. I mean, when we look at customer protections, it can't just be for retail customers. Certainly I'm concerned about retail customers, but also all investors are customers in this. We want to make sure the right customer protections and guardrails in place. Segregation of accounts is going to apply to everyone.
Yeah.
And that's going to be an important customer protection that I'm going to be looking for.
You mentioned earlier, when I asked about the Gillibrand Lummis bill, you talked about regulation keeping up with technology. Can it ever really, or is it always just how close to the back of the car or the back of the train are you?
I don't think we're chasing the back of the car. I think we're looking in the future and figuring out where we should build the road. And
you said you're behind right now, though.
Yeah, absolutely. I mean, I think some of it was sort of watching to see what was going to happen and innovation and seeing the growth. I think for a while there was this question about whether to regulate or not regulate. I think the executive order that President Biden put out really shows why there's a need to regulate. Like, it actually says that the U.S. has an interest in promoting responsible financial innovation to provide safe and affordable access to financial services. But it also says we have to take steps to reduce the risk that digital assets may pose, which is what I talked about at the beginning. And it says that we have to put in safeguards to protect investors, consumers, and businesses. That's not easy. And so thinking through those and then trying to figure out how that works for the industry as it evolves becomes really important, but also complex. And we want to be able to think through these things. I'm meeting a lot with different stakeholders, including a number of crypto companies, and asking them their thoughts.
I'm curious. Obviously, CFTC Commission, SEC, et cetera, there's partisan splits in terms of the way the commissions are designed. Is there from your perspective, is there a partisan split right now when it comes to regulating crypto or Web3?
So it's interesting that you're saying that. You know, I'm not really seeing a partisan split. I'm really seeing a lot of people who are just sort of hunkered down trying to make sure that we really are thoughtful about these issues and that we've heard from all the stakeholders. I think you're seeing Republicans and Dems both in favor of regulation on crypto. You're seeing Republicans and Dems both concerned about fraud or risk in the asset class. So I think at this point it's not so much political as complex, and we're all just trying to wrap our heads around it and try to figure out the right way forward.
I don't live in D.C. I live up in Boston, and I can tell you from whatever 100 miles north, it appears that getting anything passed through Congress is unlikely. Not just about crypto, just about things. So if whether it be Gillibrand bill or the Bozeman bill, if new congressional authority doesn't arrive, if not soon, even in the next couple of years, what's the outcome and impact of that on the crypto market and on investors in the crypto market?
Yeah, so I think then we'll continue to have a large part of a market that is largely unregulated. But what we're trying to do at the CFTC is to figure out how we can expand in the derivative space and bring more of these companies in. A lot of these companies are coming in and wanting to be in the derivative space. If you think about volatility, derivatives can actually really help with that. And so, but that raises a lot of questions. Like there wasn't historically a lot of retail customers in the derivative space. So you're sort of looking at that and thinking, how do you think about retail customers, particularly with leveraged margin and things like that? But I do think there's been a great interest in how to use the derivatives markets as an opportunity in this space to help, reduce and have a hedge and manage risk, which is what they're there for.
On the derivatives market, one of the things that's interesting is, and one of the reasons that FTX bought was it iLedger or whatever the company was that they bought was because it was FTC approved or licensed. There's relatively few of those, and one of the reasons, say, a legacy crypto company doesn't want to necessarily go through the process itself is because it takes a long time. Should it take a long time, or should that process get streamlined and sped up?
So, I think we have a pretty good process. I don't think it takes like a really long time. I think, though, you've got to.
I say this based on Sam telling me we bought it because it takes a very long time.
Well, I think at this point, it's not going to be like a turnkey situation where a crypto company can just buy a CFTC regulated entity and then just automatically turn it on. We're going to have steps we go through. They're important steps that have worked for a long time, and we have these really deep and strong derivatives markets, so we want to make sure that stays the same, and we're going to do what we need to do to make sure that stays the same.
Big picture question. This comes from a colleague of mine over at Axios Pro who asked, do you think long-term from a technical perspective and then ultimately from a regulatory perspective, should we be moving toward kind of a 24/7 crypto trading system in the U.S.?
So this has been the real interesting issue, and one of the things that has come up is like real-time risk monitoring, which I think is a great concept. How we do it is really what the discussion's about. But this idea of
But should that be the North Star?
Well, I think it might. What'll happen is I think it'll be different for different asset classes. But I think the idea of real-time risk monitoring and sort of sometimes not getting to the end of the day to look at margin or mark might be important. Others will say in some instances we want to wait till the end of the day for certain asset classes. So I think it's just going to depend. But this is something that, the idea of doing mark-to-mark and risk monitoring becomes fascinating, kind of to think through, but then you'll have others who say, well, we're a clearing organization and we like to assess the credit of our, of whoever's trading and give them additional time and wait for the market to come up. So it's going to be very interesting.
Last final quick question. You were out to dinner with friends. One of them says, hey, I just bought a bunch of Bitcoin or some other crypto asset. Your immediate response, your two-word response to them is what?
Not regulated.
Christy, thank you very much. I was wrong. So Representative Soto is en route. He is apparently 4 to 5 minutes away. I apologize. So I just want to bring out Hope King for a moment, who's going to interview him. We're going to chat for 4 minutes, then he'll be here. I promise. Hope, come on up. I get to sit in this chair now. This is exciting.
Oh, I thought I was going to...
do you want to pretend I'm a congressperson? I can tell you all sorts of things.
Yeah, well, you've learned all sorts of things this morning. What do you think the biggest takeaways were?
I mean, for starters, things have happened. Since I first came out at 8 o'clock, Coinbase laid off like 1,100 people, 18% of it, of the company. I mean, what I think I've learned is that, different things from different people. I don't get the sense that there is panic. And if I was sitting in this chair, to be honest, as an investor or as a regulator, I'd be really freaked out right now.
Well, it sounds like a lot of people think it's just another day in crypto or another week in crypto.
Which is why it's the most interesting industry, right? Because the volatility of it, which is kind of endemic to it, which, to be honest, all the regulation and all the companies around it are ultimately trying to reduce. That's a big, if not their mission, at least that's kind of their ancillary mission. It's still there. It's still such a big part of this. For you write Closer every day, which is our afternoon newsletter that goes out at the end of the markets. How important has crypto become to kind of the overall financial market and kind of what you do each day?
Yeah, I mean, we can't talk about what's happening in the markets without talking about what else is happening in the crypto markets. So we have started to talk more about it and look at the relationship and the correlation between Bitcoin and the S&P right now, I think in March, reached a 17-month high, the 90-day correlation, which shows you how in tandem everything is moving. And I think the questions that we've had, and especially in the labor market, if you look at the layoffs that are happening really in tech, I mean now coming crypto, there's a big question of how much innovation will there still be if you have to now kind of contract.
Do you invest? Do you invest in crypto personally?
I don't think we're allowed to. I don't.
Okay, I don't either. Okay, do you have friends? Let me put that a better way. Do you have friends or family who do?
I think so. I mean, they always ask me if I should or shouldn't, or if they should.
I've got a good friend who wants to quit his job and become a crypto entrepreneur, and what I wonder is if what we're seeing right now is going to dampen that at all. Katherine talked about, and you hear this from venture capitalists all the time, that the biggest cohort of new entrepreneurs is coming around Web3, and you just see so much interest, and you see people coming out of MIT or Stanford, and that's the thing they want to do. And I don't know if this dampens that enthusiasm, or maybe it increases it a little bit, because now it seems like maybe Katherine referred to them as tourists, some of those people are gone, and you feel like you can be a bigger fish, and if not a smaller pond, at least a bigger fish.
Yeah, I mean, I think you have to catch up quickly, right? There's so much that's happened already in the past 10 years that I think people getting into it now are having to learn and immerse themselves. I think that's the question I hear a lot is, how much should I be reading? What should I be following online?
What do you read? Okay, so when you were prepping to interview Representative Soto, who will be here soon, if you were, what do you read? Like, what's outside of Axios Crypto, which is a daily newsletter?
Brady
you
and
should
Crystal,
read Axios
yes,
Pro
exactly.
FinTech. What else do you read?
I mean, Cointelegraph is definitely one that I like a lot. CoinDesk, I mean, those are the ones that I go to the most. Yeah. I mean, I think one of the most interesting things, though, to your point about the retail investors that are more interested in this, is that they keep asking, should I start including this in my retirement account? We're hearing a lot of those questions come in. I mean, we know the big banks are looking into this as well. So this is really where it gets very interesting, and that's where the questions are coming from today and later on with the congressman.
The banks are fascinating because, I mean, particularly you take something like a JP Morgan, right, which, we're not doing this, Diamond, it's a scam. But on the back end, they're working on it, and now they've kind of, am I right in saying it feels like most of the banks have, if not gotten very positive toward crypto, at least gotten less hostile toward it publicly?
Yeah, they definitely are less hostile toward it publicly. And as you mentioned, they're launching all these products because they know that they can't miss out, because it's there. And I think, again, based on the correlation between the markets and crypto, a lot of these big investors have talked about how they've had to sort of pull some of their assets out of crypto to make some margin calls in the market. So that shows you where the investors are right now, how tied they are to both markets, and that the big investors are also in crypto right now.
One of the things you asked what I've learned here, I mean, one of the things that's interesting, and you heard this from Commissioner Romero, and you hear this not just from regulators, but you're hearing this now from the industry, that the industry wants to be regulated. And I know that's been talked about for years because few CEOs want to say we don't want to be regulated because that kind of implies you're doing something a little shady. But I do feel it's maybe more legitimate now because there are concerns that if nothing else, the consumers are going to freak out or that potential enterprise customers are going to freak out.
I think the word that comes to mind is clarity. Everybody just wants direction and clarity and to be on the same page. And so the more that there is clarity around the definitions of these assets, I think then they know which path to take going forward. And then on the retail side, I mean, I was scrolling through Twitter and a lot of people have been reacting to our conversation today, we still have people tweeting back at us saying, why would you invest in something that you can't see or touch or understand? I mean, that is a narrative still out there, and that's why the questions are still out there. And so I think the more clarity that's out there, the more buy-in that we have from lawmakers and policymakers, I think that would give a level of comfort to investors who are looking at this and saying, maybe this is the time I get into it.
Well, you can buy and see and understand Coinbase stock, right? That's a thing.
Yes.
Now, I don't know if Bitcoin has gone down more or less than Coinbase stock in the last day. I'm not sure. I haven't checked lately, but it's not a terribly good argument. There's a lot of things we can't see or touch, though, that people invest in. And look, I'm not a crypto investor. Oops, sorry, and obviously don't know how to use a microphone either. But it's interesting that there is still that split among the investment community, and it's not about, oh, this company is good or this product is good. Is this asset class legitimate? It's a legitimacy question.
Right, that question is still there, and I think that, again, goes back to education. Like, how much time do you have to dedicate to learning about this new asset class? If you have the time, you'll understand it. If you don't, then it still becomes a question in your mind of whether it's legitimate. I think that's also why they want to get ahead. Having regulation out there means there's more conversation in the public. We're talking about it clearly, and again, when those rules of the road are laid out, then everybody at home can say, okay, well, there's somebody, in Congress telling me that they've vetted this. I think that's what's important about all these studies that are being commissioned, and then maybe I'll, talk to my financial advisor or start looking into it closely myself.
One of the things that's interesting about Representative Soto, who will be here, I'm told, although we're vamping for a little bit longer apparently, is that he's one of the congresspeople who took Bitcoin, or was willing to take Bitcoin as contributions. There have been a handful of people who have taken Bitcoin as salaries, some NFL players, some politicians, et cetera. Do we have any, we were talking about this yesterday, and sorry to maybe take something you were going to ask him, but do we know how any of that works? In other words, how does it actually work? If I was an NFL player, got paid in Bitcoin, or I'm a politician, does the municipality or the company have to create an entire new HR payroll system to make that happen?
It sounds like it has to be the case-by-case basis. So I think what's happening in New York, what happened with the representative in Florida. I think what's even more interesting, though, is that, we did in Closer, we did a story a couple weeks back interviewing this woman who ran a study looking at Gen Z workers. And among the top requests for younger workers was access to Bitcoin. So mental health was the first, sort of what they wanted from their employer. And then on the top of that list, top 5, Bitcoin and cryptocurrencies were part of it.
One of the things that's interesting, and we didn't discuss this, and I should have discussed this with Commissioner Romero, is, she's looking at this obviously from regulatory perspective. From federal perspective, we're in D.C. Everybody in D.C. cares about things from federal level. But a lot of the regulations on crypto are now coming at the state level. There was a bill, or not just a bill, passed into law last week in New York, basically a ban on crypto mining. It's basically an environmental bill more than anything else. But there's a giant question on what that's going to mean. New York doesn't talk about itself quite as a crypto hub like Miami likes to brag, but it really is. Most of the crypto activity in the U.S., more of it is in New York than it is in Florida, despite Representative Soto. If he was here, he could dispute that, but he's not here yet. So it's in New York, not in Florida. But they've made a major decision which could significantly cause a bunch of companies to leave. Even if they're not mining companies, they could view it as hostile to the industry. Yeah,
and he is a big advocate of environmental protection, so it is a question to ask him. And, I think, if Brady and Crystal were here today, they would probably talk about where the divide's been and where the consensus has been on whether or not mining has really negative consequences on the environment.
You think it does?
I honestly don't know enough about each of the cases that we've been looking at in mass, but of course, different countries around the world have cracked down as well for the same kinds of reasons, for the same kind of concerns, I should say.
That's interesting. What's the one thing that you wanted to learn today? Not from the congressman, but just in general.
I think just where this ranks in terms of priorities. There are so many things happening in the world today, and I just wonder when the innovation, when people are concerned about the innovation, how are we pushing that when there are much sort of bigger national social issues at hand, and how are these lawmakers and policymakers looking at that? I mean, maybe less so the regulators, obviously, but for somebody like, Representative Soto, where does this really rank on his day-to-day list of things that he wants to focus on?
And I don't get, maybe I'm wrong about this, but I look at the things that have been priorities for years in Congress on the financial regulatory side, and whether this ranks high or low, I don't get I don't get the sense that something's getting passed. I mean, you get a draft bill last week. You're going to get another draft bill maybe next week. But you've got midterms coming up in, 5 months from now? Like, and there's at least a perception that things don't get done, in the 3 months going into the midterm. The crypto market that we have today and the regulation we have today is probably what we're going to have come January 1st of next year, whether this crypto winter continues or summer shows up again.
Yeah, exactly. I mean, and you mentioned this in your conversations, things take a long time to get done. And so I think we are going to be in this current status quo state for a while. But also I think that's where I wanted to ask the congressman as well is, what is he hearing from companies when they sit down with him? What are they concerned about? What are the most frequently asked questions of him, of where his mind is? And also, of course, the Congressional Blockchain Caucus that he's part of, he wants a very light touch. I want to know what that means, to have a light touch regulatory approach. And really, is innovation at all being stifled at the moment? I mean, it doesn't seem like there is. Looking at what you and Katherine talked
massive
about
amounts of
Web3.
Well, Web3, and one thing Katherine said was interesting to me was when I asked her about a practical application, because this is this big question, like, does this do storage better? Not really, it's slower. Does this do payments better? Not really, it's slower and more expensive. Is this better for the environment? No, it's just as bad, if not worse. So like all of those things, but she mentioned music, for example, and I found it interesting. I had a conversation a couple of weeks ago with kind of a major music producer, and he was very, very long-term music producer who's produced and managed all sorts of people we've all heard of, and he was very, very excited about it from the perspective of the idea that an artist, and not even just a musical artist, but maybe a visual artist, could sell something and with a smart contract be able to always have a piece of that going forward, that it might be a fractional percent, but every time that thing is resold. And you see this with fine art, right? If you paint something and you sell it at an auction house, you get your money, but then that person can sell it again and again and again. You never get a piece. And the idea that, that you'd always have a fractional stake, it might decline over time, but you or your estate, if you're dead, always gets a piece of it. That does seem like an actual practical application, but a very niche practical application.
It is, but and this might be too far of a stretch, but I remember talking to a friend of mine, whose wife is a pretty prolific author, and he's sort of against the idea of buying used books because she never sees that, ever again. And so in this example, if the book were on the blockchain, if they were able to track who
it could be.
The contract of it, she would still get some of that.
I mean, I haven't bought a physical book. This is bad to say. I haven't bought a physical book in years. I do buy them on my phone, and if I buy them on my phone, they're digital, and there's no particular reason why I guess I'm buying almost quasi-PDFs, but I could essentially be buying NFTs of books.
Yeah, but I guess I'm bringing up the example because I think, there is a desire for a lot of us to reclaim ownership of things that we just put out there digitally. And, talking to some of the early builders of NFT platforms, that's one argument they keep coming back to, is that these artists can claim that, and that they will travel along the life cycle of all of their pieces versus, putting it out there once and then hoping that they get the credit or whatever the case may be. And so I think it really speaks to sort of that desire a little bit, since we're all living so digitally out in the open.
I'll ask you one last thing, and then I get to get off stage, and I think the Congressman is here, which is, the rise of crypto, and say the rise of things like NFTs and the Bored Apes, and et cetera, of the world over the last couple of years has been correlated to the rise in incredible amounts of wealth among a certain small percentage of the population, both in the U.S. and globally. How much of that do you think? How much of that rise of the NFTs, and I'll use the apes generically, although that's part of it, is simply because people had too much damn money and they didn't know what to spend it on, so why not buy a JPEG? I
mean, I took over your newsletter for, a week once, and I was amazed during that week how much money is out there being raised, being spread around. And I also think that's part of the appeal, too, of people trying to get into it, because they see that there's a lot of money in there, and they say, okay, maybe I can get a piece of that. So, yeah, I don't know.
I mean, do you think there's underlying value? Underlying value is the wrong word, and I understand there's a community and all that crap. If you spend a lot of money on a picture of an ape, one of like 10,000, not like the Picasso of apes, just one of 10,000 that somebody created, is that a reflection of Is that a reflection of anything more than money to burn?
I mean, we spend money on Ubers with surge pricing. The value of
Yes,
that
but that
is-
gets me somewhere.
No,
That's going to get me to the
agreed.
airport, and then I can go home.
But I guess value is always, right, if you're asking me for my opinion, I don't think I'm allowed to have any, but I think the way that I would just translate it is hearing what people are saying about value is how they look at any part of their, financial wealth, and if they feel that that has value to them, who are we to say, no, you're wrong? And I think that's
Me, no, you're wrong.
All right, well, you are. I guess I'll just sit back and continue to listen for a while. I think we all value our money differently and how we want to spend it, and it just so happens that there are tons and tons of people out there who believe that they can create value by speaking it into existence in this new Web3 era.
On that note, I think I'm going to leave, and you have a guest to introduce.
I think so.
I believe.
This might be awkward because I'm not sure that he's here just yet, but let me just confirm. Hang on one second. I think we do have him. All right, well, I think that we do have him. So as long as I say his name and he comes out, everything will be okay. Otherwise, I'll look like an idiot standing up here. But I'm Hope King. I write Axios Closer with my colleague Nathan Bomey, who may or may not be here in the audience. Thank you guys so much for being here today. I have the pleasure of closing out today's program with a very special guest. He is a Democrat from Florida, Central Florida, the 9th District, and he's also one of the co-chairs of the Congressional Blockchain Caucus, Representative Darren Soto. Oh, no, not yet. Though I look like an idiot, so I apologize for that. But he will be out here. And if you guys are following along on Twitter, one of the comments that I mentioned earlier was directly from this conversation today. This person tweeted back at one of our tweets, from this conversation today, saying, "How do I invest in something that I can't see, touch, or feel?" And I think that's one of the big questions right now. And as I just, mentioned with Dan, for the last couple of minutes, I think the clarity that we need around here, around the topic, is really what is at hand. While I have you guys, I should just ask, how many of you are actually from the crypto industry and working in the industry now? Okay, not as many of you as I thought. And how many of you are on the Hill or working with staffers or are a staffer of, I guess most of you are just here because you had to be here for your, I don't know, other reasons why you're here today and what you want to learn?
Like in the VC space?
Yeah, so you want to know kind of where things are going and the regulation. I think that's the biggest question that we have as well. So I am going to go backstage and I am going to see where things are and not continue to talk like I know what I'm talking about for the next couple of minutes, because that'll be the best for everybody. So just hang tight and I'll be right back.
welcoming to the stage Axios business reporter Hope King.
Wow, long time. Hope you've been well the last minute that I've been off stage. I do want to introduce to you now our final guest. As I mentioned, he's a Democrat, and he is from Florida's 9th District, Central Florida. He's also a co-chair of the Congressional Blockchain Caucus. Please welcome Darren Soto, Representative Darren Soto, to the stage.
Good morning, everyone.
Hi, welcome.
Thanks so much for having me.
Time. So I think most of the folks who've been in this room today have been hearing about sort of the regulator side of the point of view, and I think you sit in a really unique position because you have to deal with promoting innovation while protecting consumers. So how do you balance that? What is an example of how you would do that in this space right now?
Well, first of all, the Congress needs to act to pass some comprehensive laws to be able to help establish where the agencies should have their scope of jurisdiction, and in addition, to make sure to foster that innovation. So the very laws we're working on themselves are dealing with that, trying to strike that balance with the Token Taxonomy Act, with the Digital Taxonomy Act. There's an issue right now with whether the SEC is going to regulate futures while not allowing for spot investments, and this is an example where existing laws are just antiquated, right?
Well, I think on that point, the SEC chair has said that we've got these laws, they've worked for decades, and there's no reason to throw out everything and start from scratch. Do you disagree with that?
I'm in Congress. Of course I disagree with that. Our job is to pass new laws to evolve to what society has. In the case of cryptocurrency, it could be one of 4 different types of archaic assets that are being discussed by Chair Gensler. It could be a commodity. It could be, it could be a commodity. It could be a security. It could be a currency. It even can be a future. So trying to fit it into 20th century boxes just doesn't work, and it isn't working right now. But there is good news. Look, we had bills that passed the House to help get the agencies to respond and get their input before we pass laws. While the Senate didn't take it up, President Biden put out his executive order and utilized a lot of that language. The holdup is Congress needs to hear back from the agencies. I'd wave a magic wand tomorrow and start defining these things, but some of my colleagues want to hear from the executive branch as well. So right now, Congress is in that dialogue. We expect over the next couple months to get those reports back, and then we'll put pen to paper. But saying that 20th century financial definitions are going to define 21st century cryptocurrency is just off the mark.
You've talked about this before in terms of the difficulty in defining each of these types of assets, especially because you look at it almost on a use case basis.
Well, they're digital assets, and we need to have some flexibility in it. That's something that is a bipartisan belief, and something that, as co-chair of the Blockchain Caucus, we all feel pretty strongly about.
And speaking of the Blockchain Caucus, one of the ways that you describe yourselves is believing in sort of having a light touch to regulation. What does light touch actually look and sound like in practice?
Well, it starts with defining jurisdiction so that we don't have agency overlap. It also makes sure that we're starting with basic rules of the road like we did for the internet back in the late 90s, early 2000s. Now we're at a point where things like 340 we may need to amend, but at the time we put in some basic rules of the road to protect consumers. Look, we just want to make sure we have the guardrails for the most blatant frauds that you could see, like pump and dump and other things that are intentional things, rather than the risks of the market, which are naturally going to be there, much like with stocks and with precious metals and other currencies. So there needs to be basic rules to protect consumers, but other than that, we need to allow for innovation.
So during the break, Dan and I had talked about sort of where companies are looking to you and to regulators for guidance. I use the word clarity. Would you agree with that, or is there something else that you would go further with?
Absolutely. Clarity, certainty. We are troubled by the fact that many new crypto firms, they're paying half their costs in legal just to help navigate so many of these different jurisdictions. That is troubling to us. We see a big move happen when China decided not to play anymore in cryptocurrency. That puts us and Europe as natural leads on this. But without rules of the road and uncertainty, it's tough to get capital to start a lot of these different companies.
The bill that Senators Loomis and Gillibrand put out, what is your take on their definition and how they've tried to categorize some of these as more commodities than securities?
So we definitely agree that the SEC jurisdiction should be narrowly defined to true securities, where if you're doing an issuance that results in stock later on, which every now and again has happened in the past, that should be a security, but others, it should be either a currency or governed by the FTC or CFTC. So we agree broadly with some of the ideas in that bill and are certainly have our own ideas in the House, and we need to reconcile those eventually.
My colleagues on the crypto team also would love to understand from your perspective which parts of the bill you think would be maybe would have more bipartisan support than others, and is this really a starting point maybe even?
So I can't say that I've read every single word and poured through it. We have two chambers, right? And we in the House put out our own ideas with the Digital Taxonomy Act and the Token Taxonomy Act, which is even a lighter touch than what they're talking about in the Senate with Representative Warren Davidson, a Republican from Ohio, and I'm a Democrat from Central Florida. So we'll put out and progress our own bills. They'll be putting out theirs, and then we'll either go to conference or we'll negotiate them between the chambers. But we believe in the bills we've already put out.
When you look at what happened in the markets this week, when you think about your constituents, and I know you're a strong advocate of financial inclusion, and you see crypto as a way to include more people in our systems, what goes through your head? Does any new concern come up for you now as you look at how closely correlated the markets have been with this new asset class?
It's not really a concern. Look, the same risks we see in the stock market and in bonds are in cryptocurrency, right? When we see the market take a dive, and we've seen cryptocurrency track pretty closely in value to moves in the market. To me, it's similar risks. These aren't new risks. It's just we don't have as many protections out there for this, and so now agencies are fighting to fill a vacuum, which is why we need the law. But no, it didn't raise any new concerns. It's just more that it has similar investing risks as other areas.
When you sit down with companies and they talk to you in this space, what are you hearing from them? What are their most frequently asked questions of you?
Well, certainty is a big part of it, making sure that we have agencies that are going to help them get to market. A lot of folks, they have great ideas, but then they're never able to capitalize on it to expand the different types of assets that can be utilized, as well as making sure to distinguish between those who are their exchanges and among other more sort of the tech support companies underneath it, and to distinguish those. That came up in the tax reforms in the infrastructure package just a while ago.
And one of the things that, again, that you've talked a lot about in your own district is how crypto can help small businesses.
Sure.
Investing in crypto is a little bit different than having mom and pop shops or sort of accept crypto. How do you plan to educate people who, as I was mentioning to the crowd before, tweeting at us saying, I think the exact quote was, only fools invest in things they can't see or touch or understand.
So for me, I've been interested in it for a while for the use of it, right? So I represent Central Florida, a place where folks come to travel from all around the world to our top theme parks and our beaches and so many other great things. So when we're talking about doing international services, like putting together as a travel agent someone's experience in Central Florida, or helping out with other services in that area, you reduce friction costs by using cryptocurrency across several different nations. So that's a big, exciting part of what can help Central Florida, being that we do so much international tourism business, but also for remittances. We have a lot of first-generation immigrants, and they have family members back in places that are not stable, like Venezuela, and now we're seeing in Ukraine how it was able to help through decentralized currency to be able to undermine the attacks of an unjustified Russia.
And do you think that this is the time now for people to start investing in crypto for their retirement?
So I generally don't advise people to invest or not invest in any type of asset, whether it's cryptocurrency or whether it's stocks or bonds. I think the key is people need to reach out to their advisors, but I'm here because I know it's an important part of both our current and future economy. And so there needs to be rules of the road, and I certainly never gave investment advice before. I'm not going to start here, but I do believe it's an important industry and an integral part of the financial system.
Last question, where does this rank on your list of priorities that you have to focus on every day when the nation is facing so many crises at the moment?
So it's a top 10, but there's a lot going on, obviously. We are dealing with a major manufacturing package, the U.S. Innovation Act, which is very big in our committee. We're about to go through a big privacy bill today, finally, that's bipartisan, that a lot of you may see today, a long hearing on that. Obviously, costs are a huge part, helping fix the supply chain, getting folks back to work, helping out with reducing costs overall is a big part of the Congress's challenge right now, as is the nation. And then back home, protecting Florida's environment, getting all my projects in the budget in there is also pretty helpful.
Is there a conflict between the environment and crypto?
We wouldn't say it's a conflict as much as mining takes up more and more energy, we need to look at ways to make it more efficient.
Congressman, thank you so much for joining us today.
Yeah, thanks for having me, everybody. Appreciate you.
Thank you. Thank you so much. And before we wrap, I just want to thank our sponsor, Grayscale, for making today possible. Thanks also to all of you for joining us today in person and watching online. I'm Hope King. We'll see you next time.